Hello and welcome back to Insightsias. In today's lazy lesson, we shall discuss about the Banking Regulation Amendment Bill 2020. The bill, which was recently introduced in Lok Sabha by our Finance Minister, seeks to give more powers to RBI in controlling urban cooperative banks. But before understanding the key features of this bill, we need to understand clearly the differences between urban cooperative banks, rural cooperative banks, and other commercial banks. So let us divide today's topic into three important parts. In the first part, we shall discuss about the cooperative banks with the special focus being on the urban cooperative banks. And in the second part, we shall discuss about the key features or key changes brought about by this bill. And lastly, we shall understand about the implications of this bill or the provisions in this bill. Now, before understanding the meaning and features of cooperative banks, let us understand the basic meaning of cooperation. What is cooperation? Cooperation here means to live, think and work together to achieve a common goal through the cooperative principles. This means cooperative organizations bring together people with common goal to combine their resources to achieve a mutually decided goal or the objective. So similarly, cooperative banks are often created by persons belonging to the same local or professional community or sharing a common interest. One very interesting feature of this cooperative bank is that it is owned by its members, which means here members are at the same time the owners as well as the customers of their bank. And the main aim of cooperative banks is not to earn profits but to provide services to the weaker sections of the society. And these cooperative banks are registered under Cooperative Societies Act of 1912 and are governed by the Banking Regulations Act of 1949 and Banking Laws Cooperative Societies Act of 1965. And the next question we have is, what are the different types of cooperative banks operational in India? Here mainly the cooperative banks can be divided as rural cooperative banks and urban cooperative banks. And further, rural cooperative banks are divided into short-term cooperative banks and long-term cooperative banks. And it is a little complex to understand the regulation and overseeing of these cooperative banks. There are mainly three entities or organizations involved in overseeing or regulation of these banks. And these entities are the Reserve Bank of India, the Register of Cooperative Societies, and thirdly, NABARD, that is the National Bank for Agriculture and Rural Development. Well students, please note here, this might be an important fact for your prelims. Firstly, the role of the Reserve Bank of India here is to regulate and supervise the banking functions of the state cooperative banks, district central cooperative banks or urban cooperative banks under the various provisions of the Banking Regulation Act of 1949 and the Reserve Bank of India Act of 1934. Which means the RBI decides here matters with respect to the maintenance of capital adequacy ratio, statutory liquid ratio, etc. But various matters related to the incorporation, registration, management, audit, liquidation, etc. in respect of these banks fall under the jurisdiction of the concerned Register of Cooperative Societies. This is why we say the cooperative banks are said to be under the dual regulation. And further, as per section 35 clause 6 of the Banking Regulation Act of 1949, NABARD, that is the National Bank for Agriculture and Rural Development, has concurrent powers to inspect state cooperative banks and district central cooperative banks. So this was all about the cooperative banks and their regulation. So let us now discuss about the key features of the recently introduced Banking Regulation Amendment Bill 2020. But before understanding the key features, why this was necessitated, let us understand. Firstly, here this kind of regulation was felt necessary in the wake of the recent Punjab and Maharashtra cooperative bank crisis. The PMC bank crisis arose when it was found that the PMC bank had provided loans, that is 75% of its total loans, to one single real estate entity. And when this real estate entity collapsed, it led to this banking crisis. So the first reason is that to prevent any such crisis in future, it was felt necessary to bring these urban cooperative banks under the supervision and regulation of the Reserve Bank of India. And in recent years, these urban cooperative banks have become very significant. That is, nearly 1,500 urban cooperative banks across the country have 8.6 lakh account holders in their respective banks with a total deposit of about 5 lakh crore rupees. So this is exactly why we cannot let these banks fail. It is because the deposits in these banks are the savings or investments of the large sections of our society. And lastly, with the increasing significance of these banks, there are also rise in the number of fraud cases with respect to these urban cooperative banks. Now, as per the Banking Regulation Amendment Bill 2020, cooperative banks will be audited according to RBI norms. Here cooperative banks means urban cooperative banks. And henceforth, the RBI can supersede the board in consultation with the state government if any cooperative bank is found to be under stress. Further, appointments of chief executives will also require the permission of RBI. And further, as per this bill, audit of such banks will be as per the central bank's guidelines. And also, recruitment for banks management will be based on certain qualifications. And more importantly, please note here that the provisions of this bill shall be applicable only to urban cooperative banks and multi-state cooperative banks. So the ambit of this bill is very important here. So what is the significance or what are the implications of this bill? This bill will bring the cooperative banks on par with the developments in the banking sector through better management and proper regulation of cooperative banks with a view to ensure that the affairs of the cooperative banks are conducted in a manner that protects the interests of the depositors. And it will also strengthen the cooperative banks by increasing professionalism, enabling access to capital, improving governance and ensuring sound banking through the Reserve Bank of India. So here are some of the challenges that are being faced by the urban cooperative banks. Firstly, they have limited ability to mobilize resources. Then there is low level of recovery and it also includes high transaction cost. And they are also not able to formulate their respective policies for investment of their surplus resources because of certain restrictions. And above all, rising NPA, that is non-performing asset levels in urban cooperative banks are also disproportionately high. Similarly, rising competition, low capital base and scam are other problems. So the need of hour is to address all these problems and let the urban cooperative banks grow.